want to mention that yesterday was actually the first day of trade after the clocks changed in the U.S. for daylight savings. Now, the major U.S. indices ended higher, but historical data shows that that is not the norm. Going back 12 years, equity markets around the world usually sell back on the first trading session after the clocks move forward. Around the world, the worst performing index has typically been Japan's Nikkei 225, off an average of about 0.7%. Now, the biggest one-day loss for the Nikkei a day after daylight savings time was 6.2%. That was on March 11th, 2011. That was a black swan event the day the massive earthquake and tsunami triggered the Fukushima nuclear disaster, which helped explain why it's a little bit of an outlier. The Euro Stoxx 50 and the Nasdaq are also typically lower after the time change, with average returns of about 0.4 and 0.3% respectively. Now, the relative best performer is the Dow Jones average, but it has also been historically lower a day after clocks spring forward. We'll call it the daylight savings effect, but stocks do not typically perform well when the clocks change. Maybe it's a bit of confusion. I know it confuses me a little bit.
It definitely confuses me, and it also means we have a slightly shorter show, which is a great disappointment, but nonetheless always action-packed.